Hello and welcome to the results overview for PNB Housing for Q3 FY19. We look at the salient points on the company's performance in this quarter. Note that this is an abridged version of the results analysis. For detailed analysis, please visit investing.amitkirti.com. Let us start with the P&L numbers. The graph on the left-hand side captures the revenue growth and the expense growth. Year on year, the revenue grew at a very healthy rate of 46.7%. The growth in expense was equally higher at 51.5%. I was looking at the revenue growth for the past 5 quarters, which is captured in the figure on the right-hand side. Q3 FY19 seems to be the best quarter as far as revenue growth in the recent quarters is concerned. It was pleasantly positive side considering the fact that Q3 FY19 saw the full-blown NBFC crisis that led to a sudden drop in commercial paper lending that affected many NBFC companies. I hope the company is able to sustain this revenue growth. The graph on the left shows the growth in PAT and the growth in EPS. PAT growth was very good at 32%. EPS growth followed the PAT growth at about 31.3%. The graph on the right-hand side shows the historical PAT growth for the past 5 quarters. Clearly, the last 2 quarters have been the disappointment. I hope that the company goes back to its stellar numbers in the future. Let us now look at the expenses for Q3 FY19. Let us first start with the finance costs. Finance cost represents the interest that the company has paid on its borrowings. There has been a growth of 52% in the finance cost. Note that the revenue grew by 46.7%, whereas finance costs grew at a higher rate of 52.2%. Since finance cost is a major component for the overall expenses have also grown at a faster rate compared to the revenue. The graph on the right-hand side shows the growth in employee costs, growth in other expenses, as well as growth in impairments and write-offs. Let us look at the rise in employee costs. There is a huge growth of 120% in employee costs. There are two major reasons for this. The usual hike in salaries, and the sales team of the company was part of a third-party organization and its salary was being amortized all these years. With the new accounting standard, the company has to expense the salary of these employees instead of amortizing it. So these are the two reasons that led to the higher employee cost, and these will continue to be more for the next coming quarter as well. Moving on to the next expense, that is other expense, there has been a moderate growth in the other expenses. Now with respect to impairments and write-offs, there was a noticeable growth of 45.4%. As we shall see later, there has been a rise in NPAs as well, which indicates that the company had to do higher provisioning for these NPAs. The company additionally provisioned about 11 crores as a precautionary measure. This would have led to the higher numbers that we see for impairments and write-offs. Now the graph on the left-hand side shows the disbursement growth for Q3 FY19 with respect to Q3 FY18. On the face of it, a year-on-year growth of just 1% seems like a huge disappointment. Adding to the disappointment is the graph on the right-hand side, which shows that over the past 5 quarters, the disbursement has constantly dropped. If one were to look at just these two graphs, it would appear that the company's growth seems to have slipped. Now coming to the 1% growth that we see, one should be cognizant to the fact that last year, that is in Q3 of FY18, the company had a one-off bonanza with respect to lease rental discounting business. The company had managed to secure a large 1,680 crore lease rental discounting business in Q3 of FY18. So that's why in the graph on the right, you will see that Q3 FY18 saw 100% growth in disbursement due to this business. Hence, due to a large base effect, the growth in disbursement is optically lower for Q3 of FY19. But quarter on quarter, if we check, it is much higher growth in disbursements. Now the graph on the left shows the cost to income for the company. Over the years, the company has been able to bring down the cost to income. In Q4 of FY18, the management had indicated that they would like to see the cost to income for the company come down to 16%. We are yet to see those numbers. The graph on the right hand side shows the return on equity for the company. For Q3 of FY19, the return on equity was very decent at about 16.22%. After the IPO in FY17, the return on equity had dropped to about 14%. From that point on, the return on equity has kept on improving. It is expected for any company to have a ROE that is above the cost of capital, which is 15% in India. Now, PNB Housing may come with a follow-on offer to maintain its capital adequacy ratio in Q4 of FY19 or Q1 of FY20. This might again drop the ROE values for the company. Now the graph on the left shows the borrowing profile for the company over the past 3 years. There are quite a lot of numbers on this graph. So I would like to point out to two interesting numbers: deposits and bank term loans. The company would like to see its deposit grow and see its reliance on bank term deposits to drop. But when we look at the history leading to Q3 FY19, it is exactly opposite of what is expected. The deposits in the borrowing profile basket have reduced, in fact, from 25% to 16%, and the bank term loans have increased from 6% to 17.3%. PNB Housing is one of the few NBFCs that is deposit taking. Hence, I expect the company to be proactive in garnering deposits, which has clearly not happened. I hope the deposits improve in the coming quarters. The graph on the right hand side shows the Tier 1 capital adequacy. Post the IPO, the Tier 1 capital has been decreasing slowly, which is expected. The mandatory requirement for any HFC for Tier 1 capital is about 6%. At the numbers that we see at 11.37%, we are fairly comfortable. But I believe the company will not wait for Tier 1 to go down that low. That is, it won't wait till the capital Tier 1 goes down to 6%. The management is expecting the company to enter the capital market to raise money sometime in Q4 of FY19 or the first quarter of FY20. The graph on the left shows the gross NPA and the net NPA for the company. For Q3 FY19, the GNPA was 0.47 and the net NPA was 0.37. Note that the NPA numbers are the highest in the past 5 quarters. Even though the company is in a rapid growth path with respect to its AUM and disbursal, it is still able to maintain its NPA numbers, which is a very good sign. The graph on the right hand side shows the AUM growth over the past 6 quarters. From the graph, it is clear that the company has been able to grow its assets under management every quarter. Growth in AUM is a leading indicator of future business growth and the future revenue growth as well. Let us wrap it up with a quick summary. Revenue growth was excellent in Q3 of FY19. PAT and EPS growth was very good. Disbursement growth appears to be disappointing. However, that was because of a higher base effect. So I'm okay with the current disbursement numbers. AUM growth has been great. The NPAs increased by a few basis points. That was a little disappointing. The company has to provision more. That is one of the contributors to a lower PAT. However, as company MD says, it is impractical to have lending agencies that do not provision. However, I do hope that the company can invoke SARFAESI on erring customers and reduce its NPA numbers. Overall, this was an extremely good quarter and I am pretty happy with the results. This was an abridged version of the results analysis for PNB Housing, wherein we tried to cover some of the key numbers. For detailed analysis on PNB Housing Q3 FY19 results, I would request you to visit investing.amitkirti.com. Thanks for listening.